We're joined by Khiem Do. He is head of Asian multi-asset strategy at Baring Asset Management. Khiem Do, thanks very much indeed for coming in. What are you looking at? And do you know, when we see that statement from Tom Albanese that China continues to climb this wall of worry, what do you make of it?
Well, I think that in the case of China, growth, I don't think that we have to worry too much about it. There is going to be a slowdown, definitely, because the world is slowing down and because of the monetary tightening in China. But I do think that it will still be somewhere between 8.5% to 9.5% over the next 6 to 12 months. So I don't think that investors should worry too much about that.
What about this wall of worry?
The wall of worry, I think that is more in the investors' minds rather than from the Chinese policymakers' mind. I think that what Chinese policymakers are more worried about, as we just discussed then, is the inflation picture. And I think that what we would like to see is for inflation rate to drop below 6%, which would allow the central bank perhaps to cut the triple-R ratio.
That's the thing, but I think most of the economists who've been sitting where you have been actually incorrect. They've been saying, oh, base effects mean that we'll have inflation peaking in August and then falling down well below the 6% level by about now, actually, and we haven't seen that.
We haven't seen that. You're quite right.
It is sticky, isn't it?
It is sticky. There is no doubt about that. But I think that we're looking at, global commodity prices weakening off a little bit, and always there's a lag effect. I mean, inflation is a lag indicator. It's not a leading indicator. So we do think that you should see lower inflation numbers by the end of this year.
But, many people point to food prices, and of course, then the food basket is huge for the average Chinese consumer. But what about wage pressures? They must be building up now as well, with minimum wages going up in various cities.
Yes, they have been building up. That is correct. But whether companies can actually reflect that through higher prices, I think that is another question altogether. I think that there has been some price increase at the final product level, but I don't think that it is a massive increase. So I think that inflation is still pretty much contained.
Right. Well, if we get a growth figure of, let's say, 9% plus, now, how much of that is investment spending driven?
I think that investment spending actually has declined somewhat as a result of the monetary tightening, which actually has slowed down the infrastructure spending. So I do think that consumption will increasingly take a bigger market share of GDP.
Well, Nuri Rubini contends when you've had such a massive splurge in investment spending, you're going to get a hard landing, and he's predicting one for 2013, 2014. Would you agree with him?
I think that hard landing in China would only happen if the world actually goes into a deep recession. I doubt it very much that China in itself would go into a hard landing scenario without the world collapsing. So I think that it could happen, but I would only attach a very small probability to that.
I mean, China is not a driver of growth, but it is one which is...
A big contributor, of course. Yeah.
Well, is it? I mean, it's not a contributor to world growth, perhaps, but it's a contributor to certainly the export side of things contributes to its growth. So, sovereign debt crisis, pretty weak growth in the United States as well. That's going to take its toll on the Chinese economy at some stage.
Yes, it would. But that's why we were thinking that growth for next year would be somewhere between, 8.5% to 9.5%, rather than, let's say, 9 to 10. I think that is over. I think that we have to scale down our expectations. But I think that 8.5% to 9.5% for the second largest economy in the world is still very strong. Yeah.
Well, looking at it, the sovereign debt crisis, of course, still playing out here. Yes. We were seemingly close to resolution of it yesterday when they said, oh, it's going to take us a week to sort it all out. But now Germany's saying, hey, hold your horses. Well, can I get a comment on that?
It's challenging, I must say. The politics of Europe are very challenging. And I think that in the case of Germany, obviously, they don't want the market to raise hopes too much in case it gets disappointed. And then,
of course,
next week...
France is its bedfellow when it comes to this, and France facing its own challenges now, too.
Yes, that is correct. Well, the thing is, if you look back a little bit, if the U.S. credit rating was downgraded, lots of people ask the question, why didn't France get downgraded on the same day as the U.S. did? So I think that if France's credit rating were to be downgraded, I don't think that it is a massive surprise, really.
Okay, well, we're looking forward to this data coming out, of course, at the top of the hour. So we're looking at, what, 9.5%, something like that?
Something like that, yes.
And property prices as well. That's going to be key data. That's also coming out at roughly the same time. Now, what about the property market? How worried are you about the state of it in China?
I think that in the major cities, definitely at the luxury end, it definitely is a bubble. I think that if you ask any professional person living in Shanghai or Beijing whether they can readily afford to, move into a luxury flat, they would say no, because it's too expensive. So I think the luxury end in the major cities definitely bubble. But I don't think that you can say that about, the whole of China. I think that properties in general is still affordable because the latest property launches have gone very well.
Khiem Do, thank you so much for joining us. Khiem's from Baring Asset Management